Hey, Mark Walters here. In today's video, we're going to be talking about the housing crash that has yet to happen and some of the factors behind it. But before we jump in, I just want to make sure that you get your copy of my free book, How to Find Millions in Private Money Loans. Simply go over to findprivatemoney.net and grab that. Also, if you're not already a subscriber to my daily Extra Income Sources newsletter, you can do that over at passiveincomestacking.com. I'll also put the links below in the description or on the show notes page, either way. But right now I want to talk about the housing market crash because that's something a lot of people talk about. But not only that, we talk about it here in my house because my daughter is about to get married. And of course, we talk about real estate prices, things like that, because she and her fiance want to get their first house. And, you know, growing up in my family, being third generation real estate investors, we've always talked about real estate and what's happening with the market, different strategies, and also what's going to be happening with the market. The good thing about real estate, unlike the stock market, is the cycles take a while. Whereas stocks can go up, they can go down, there can be bubbles, there can be crashes, things happen very quickly. But with real estate, it kind of lags. So we have a chance to look at markets, see why they're doing the things that they're doing, and then we can plan accordingly. And of course, that is the conversation that's going on in my house as we speak right now. And the reason for that is because, at least as I'm making this video and going back in time a little bit, you know, before we had the COVID crash of, you know, everything going on around us, the COVID situation, and then of course, how that crashed the stock market and affected where people could go out, when they could go out, and it affected businesses that depended on people coming out and, you know, all that kind of thing. So it affected our economy greatly. As I'm making this, it's still, you know, in the beginning stages. So prior to all of this, I realized, as a lot of people did, and you probably did too, you probably had been hearing about it, we had this great long bull market, you know, the longest in history, and, you know, things don't always go up. There's cycles. So people were saying, well, there's going to be a market correction. There's going to be a crash, both in stock market and in real estate prices and things like that. Now, if you go back in time, you know, things go up, things go down. So it was just really a matter of time. And a lot of times it's going to be some event that then triggers that sort of thing, you know, be it bad loans back in the early 2000s, and then also bad loans in the late 1980s, early 1990s. We had similar market crashes because of bad types of financing for people getting into houses. So then fast forward a little bit. Of course, our market was going like gangbusters there after the 2008 crash and the rebound. And then the market was just this bull market. And so everybody realized, hey, there's going to be a market correction. And that was what I was sharing with my daughter and her fiance when the conversation about when to buy a house, you know, would come up in our family, which was a regular occurrence. So I would be letting them know, hey, you know, the market's probably going to be correcting here. And once the COVID scenario came and the stock market crashed, of course, because stocks, you know, they go up and down much quicker than the real estate market. Well, then naturally, my family is talking about, well, when is the real estate market going to crash as well? And as I'm making this video, the real estate market is pretty hot. And so it's like, hey, Mark, weren't you saying that the real estate market was going to crash? So that is a conversation that I have with my daughter, with her fiance, because of the timing, so to speak, of when they should be buying a house. So why is it after this market crash, and our economy is definitely challenged for a number of reasons, which we'll touch on in this video, why is it that real estate is doing so well? Well, there's a handful of reasons for that. And one of them is going to be low interest rates, of course, because the government is doing whatever they can in order to prop up our economy, because we've got a lot of challenges. So they're printing money like crazy so that they can buy treasuries, they can buy corporate bonds, they can buy municipal bonds, so that they can prop up, you know, our general, you know, along with the companies that are really big companies, that if they come crashing down just like before, well, you know, that's not good for the economy. And then of course the municipalities, the cities and the towns that depend on the tax revenue of the small businesses and the franchises in that town, be it restaurants, bars, places where people are getting their hair cut, and everywhere else that you're driving around that you see the small businesses, even if they're large franchises, it's usually some type of a small business that is investing in these franchises. They might have great success, so they have a number of these franchises, and it could be that that's diversification for a lot of different businesses that they're running. But in the meantime, it's not as though they can go several months without income before they have a serious pinch in their whole business climate, and as far as their own personal business economy for these small businesses. And when those businesses aren't generating income and then subsequent taxes for those cities and towns, well, those cities and towns, they suffer, of course, and they depend on that money to be able to run the infrastructure of the town. So the federal government, they are printing money and then buying different municipal bonds so that they can keep the cities and towns rolling, to help subsidize the fact that they're not getting the tax dollars coming in. So on many different levels, this is happening. And of course, they're also giving out the stimulus checks to different people. Unemployment is so high. We're going to touch on that and all the things that the government is doing to help. So the key here is the government is helping to prop things up, when if they hadn't, well, then things would be crashing down, and chances are we'd be seeing real estate prices crashing much sooner than we're seeing it right now. Now, I don't have a crystal ball. I don't know when something's going to happen. I'm not predicting something's going to happen, but we can look at some of the clues right here and then start to figure out, about the housing crash, because we have cycles. We've seen it before. It's not like it's a one-time thing. It's just how things work. So we start to think, okay, why could there be a housing crash, and when could there possibly be a housing crash? Because that is one of the key things that we talk about in our family because of the reasons I just shared. I've got my daughter and her fiance wanting to start their life and buy a house. All right. And they're turning to me saying, hey, Mark, you were saying there was going to be a crash. I'm like, well, there was a crash with the stock market. We've got an economy that's challenged. We just haven't seen the lagging real estate market, act that same way too, because for one, it lags. And two, we've got the government that is printing money and keeping things propped up artificially. Okay. So first of all, what is one of the things that the government does in times of crisis? One of the things is they lower interest rates. And we've got historically low interest rates, 50-year all-time low. I shouldn't say 50-year all-time, but 50-year low of interest rate prices. So that's great. And you've probably recognized that. Maybe you've gone and bought a property. Maybe you've refinanced a property. And they're so low that that's then going to get people off the sideline and in the market for buying a house. So there's one reason for demand. The other is low inventory. So you've got people that are hanging on to their properties for several reasons. One, of course, maybe they're not making their payments. They just are hanging onto that house. Or maybe they're thinking, well, I wouldn't mind getting another property, but if I sell this property for a bunch, I'm going to be charged a lot when I go to buy another property. So they stay put. So either way, we've got low inventory and high demand. And of course, that is going to keep prices strong and sometimes push them up. I know in my Phoenix marketplace, it's really one of those things where properties sell quickly and you have a number of people that want the same property. That is as I'm making this video. So it's like, Mark, you were saying that the market crash is coming. That's what I'd be hearing from my daughter and her fiance. And it's like, okay, here's some of the reasons why we haven't seen it yet. Low interest rate, and then low inventory of housing. That's going to create more demand, and with less inventory, it's going to keep the prices strong or going up. Now, another aspect of the delay of the potential housing crash is the fact that we've got a lot of unemployment due to the COVID situation. And with the unemployment and the people getting unemployment, at a certain point, they were getting $600 a week unemployment, plus what they might be getting from the state. That artificial income is going to create a lot of people that, one, take advantage of the situation, but then also two, the majority of which really needed the help. And I'm all for people getting help because that's really what my business model is all about. But how that affects the market is that people may not want to go back to the job that they had because maybe they weren't making as much, or maybe they were making similar amounts to what they're getting paid with their unemployment plus the $600 additional weekly, and they don't want to go back to work. And the fact that the government did that and is doing that, well, of course, that is going to affect the economy as well. And one of the things that I've been researching and learning about what the government's intentions are as far as printing the money, the Fed is printing the money, and then the government is buying the treasury bills, the corporate bonds, the municipal bonds, that from what I'm hearing, they're saying that, this could be just an ongoing scenario until further notice, right? So if the government is willing to just keep printing money to keep our economy afloat, well, who knows how long they will pay the extra in unemployment. It could be that there's a certain time frame where obviously the $600 runs out, but will they then say, all right, we're going to pick up on this and continue on and help people more? And it'll be interesting to see what happens after the election as well. Once that kind of settles itself out, what the government will do. But you've got the unemployment and the subsidies that that produces. When that goes away, obviously trouble. And really all the government is doing is prolonging that trouble by printing money and getting it into businesses' hands, getting into people's hands. So it's prolonging the reality of, hey, they've lost their job and they've got to move out of their house. And then there becomes a more glut of properties on the market when that happens more mainstream. So you've also then, with that in mind, the people that can no longer make their mortgage payments, the homeowners, they take advantage of something that is made available, particularly with the government insured loans, and that's forbearance, where they don't have to make a payment for 180 days, 6 months, and that can then extend another 180 days. So we're talking 365 days potentially where people don't have to make their payments and they're not losing their house. Now, if there wasn't such a thing and they couldn't make their payment, of course they go into default, there's a foreclosure, and then those homes come on the market. And after a huge crash and the COVID scenario of unemployment and businesses that just can't make it anymore because people aren't allowed to go out and patronize those businesses, if the natural really effects of that were allowed to take place, we'd be seeing people losing their houses left and right. Then we'd have massive inventory, which of course, when there is more supply than demand, that means the prices would go down. And when you start to think of the housing crash and when it might happen, you have to take into account the effects of forbearance. And then you have to say, okay, what are the timelines of forbearance? Well, if it's 180 days plus another 180 days, that's a year out. And that's assuming that the government isn't going to be able to say, all right, we're going to extend it another 180 days or another 180 days, assuming that they continue to print money ongoing and ongoing when they need it. Could they, looking back at the 2008 crash, say, okay, we're not going to let that happen again. We're going to be proactive. We're going to quickly print money. We're going to extend forbearance. I don't know how long they're going to do that or if they will. But the fact that there's forbearance currently and then that's 180 days plus another 180 days, we're talking at least a year out then. So if people can't make their payments at that point, of course, you've got then the foreclosure period, the auction period, which could go some months. And then you've got the time frame in which those sales actually happen, the administration behind the scenes type of thing, that could be another month. So it pushes it out. And so when we talk about a housing crash or a housing correction, that's another part of the equation here. In markets past, we have seen where markets have truly crashed down and the prices have been as if we've gone back in time. And being somebody who is from California, I remember being a young person what the prices were. And then as I aged, what the prices were. It's like, wow, going back in time is really an amazing thing. When I moved out to Phoenix and started buying houses back in the 1990s, it was as if I was going back in time in comparison to the prices of California houses at that time. So market corrections, market crashes, it's as though we're going back in time for prices. Right now, with the interest rates being so low as I make this video, where they are at 50-year lows, Well, that's as though we're truly going back 50 years, right, to what the interest rates were back then. So that's a unique perspective from the standpoint of what money is going to cost you to buy the house. So the question then remains, when is the housing market going to happen, and how big of a correction are we talking about? Well, when you start to talk about forbearance, at this point you say, okay, it's 6 months plus 6 months. Will that be extended down the road by the government so that it really is pushing the housing correction or crash even further? Maybe. I wouldn't put it past them if they're continuing to create trillions of dollars and generate, print them off and print them off time and time again. What's to keep them from doing something like that? Obviously, you've got the investors, the banks. The banks depend on that income. That's why they're loaning the money, the interest. And then, of course, as far as loans being sold for those investors that are buying loans in bulk and things like that, when the creditors aren't, I shouldn't say creditors, when the debtors, the people that have borrowed the money, aren't making the payments, that investment is a problem as well. And it becomes a domino effect. But at this point, we're just talking about the housing crash or the housing correction and when it might happen. And those are the things that we have to start to look at. Now, how far will it go down? We don't know. So will it be a true crash? Will it be a market correction? If you look at the chart of kind of how the housing market was during the last crash to then where it went up after that, will it go down 30, 40% as far as a correction, or will there truly be a crash? We'll find out. But it's important to realize how forbearance plays into this, how unemployment plays into this. Will the government prop things up even longer and give people money with money that the Fed is just printing anyway, so that, it keeps our economy looking as though it's normal with money that's not backed by anything? We shall see. So housing crash, housing correction, of course, we don't have a crystal ball, but when you start to think of, hey, you're looking around and you're using common sense and you're realizing the market shouldn't be, doing as well as it is right now. Now, obviously, we've had correction, we've had problems, and depending on where you're looking at this, you might say, wait, it's really bad. The unemployment is everywhere. And that's absolutely true. Then the unemployment checks that come to those people, that definitely helps them out. If that extra 600 wasn't there, it would be even worse. For people that are in houses that they can no longer make payments on, they could certainly be in default right now if it weren't for forbearance. So yes, we've got a real problem, but the government keeps things propped up. And then, of course, if you're a small business owner, which I've had different places where I've had brick and mortar businesses, I don't now. But boy, I would feel devastated if I couldn't have people come through my front door. That's a huge reality if you can't make the payment for both the triple net payment for your brick and mortar place of doing business, plus all the other overhead. And if you have bought into a franchise, the franchise fees and things like that. So definitely there's problems going around. However, people are still going out. People are still spending money because of this propping up of our economy through the printing of money, getting it into corporate bonds, paying the treasury, paying the municipals, paying extra money for unemployment, the forbearance. That prolongs things. So the conversation that I have to then have within my family and extending that conversation is, if things were happening, as if they were happening to just us as an individual, hey, you can't make your payment anymore? Okay, you've got a real problem, or hey, my business isn't making enough money. Well, I'm just going to print up a bunch of money and then I'm just going to pay my bills with that. That's not reality as far as good fiscal responsibility. It is the reality of what's going on in our country right now, but how that affects good deals in real estate coming along, we have to take that into account. So when I'm having the conversation now, I have to share the backstory of the why, because, if we were thinking rationally, we'd say, okay, people have lost their jobs in mass. Unemployment is huge. Cities aren't getting the type of money that they should be because as far as with the property taxes and the taxes in general, as far as when people are buying things in businesses around town, because people can't go out, those businesses are suffering. People then can't make their payments on the housing that they've got, and they should be going into foreclosure because the default on their loan if they couldn't sell the property to somebody else. And that should then allow the market to naturally flow with new inventory, which would mean that the supply would be much larger. If interest rates stayed low, it would be a great opportunity to buy some real estate, some houses at great prices. But that hasn't happened yet because of all the things we talked about. And I didn't want to just say, hey, it's going to be a while. Well, why is it going to be a while? Well, those are some of the things to take into consideration. So, definitely do your own due diligence on this. Start to listen to a lot of different people out there that are sharing this type of information. That's what I do. I try and gather a lot of great insights so I understand why the things are happening, and then start to put, because of the things that are in place that we just talked about and the time frames within them, so that we can start to realize, okay, here's the reasons why the market is doing what it's doing. Here's the time frame that these mechanics are going into the marketplace, that how long that they might be in existence for. And then once those kind of work themselves out from a time frame perspective, where will people be at that point? And then how will the market be affected? And if we then see a lot of inventory, it could be a very exciting time for prices, depending on what the government may do. And the fact that our dollars are no longer backed by anything and haven't been backed by gold since 1971, it's a fiat currency, and they're just cranking out money. Well, if they continue to do that, or the statements that they seem to be making is the fact that they're going to continue doing this as long as it takes, well, then we don't really know if the forbearance is only going to be 6 months plus another 6 months. Could it be added on to that? And could other things that the government works out to help people and help prop up the economy, will those things then be put into place after that? I don't know. I don't have a crystal ball. But gathering all these pieces of information gives us a better understanding of what's going on, whether it's rational or not. It's the reality that we're living in. Try and make good decisions and then go from there. So with that in mind, definitely continue to get information. Subscribe to my channel here so that I can give you more and more as I'm gathering more information as well. If you like this video, give it a like and hit the bell, and so that you're alerted the next time I have a video coming out. Don't forget to get my book. If you need money for real estate deals, get my free book, How to Find Millions in Private Money Loans, over at findprivatemoney.net, and definitely subscribe to my daily Extra Income Sources newsletter. I share all kinds of ways that you can be earning income from home, and you can get that over at passiveincomestacking.com. Until next time, I'm Mark Walters, and I'll share more with you soon.